All right, looks like the live stream show software is working. So I've been teasing for the last couple days about talking about the new real estate bubble, thanks to the Cantillon Effect, which is causing unbelievable amounts of distortions, especially with asset prices and asset price inflation. We have all this currency and credit sloshing around, and it's going to cause false market signals. And it's going to be blamed on capitalism, but it's not really capitalism because it's central banks and governments offering bailouts, creating enormous amounts of currency and credit, and giving it out to their friends so they can make lots and lots of extra profits. So we have a distorted real estate bubble now, and this, the way I'm going to frame it, is going to be the home construction boom. And I'm going to read an article about this. We have a home construction boom on one hand. The home builders have never been this confident, so really since 2005, 6, 7. That's how booming things are going right now. Boom, boom, boom. Home building construction confidence in certain parts of the United States versus the coming eviction wave. So these types of bifurcated real estate markets, and we're using air quotes here because these ain't really markets. Okay, this is a government scheme to keep real estate prices higher with extra currency and credit so they can steal more in property taxes, as I discussed last night. My friend George Gammon has also discussed this too, and also capital gains taxes on real estate. So let me talk about the distortions, because honestly, I do not think, I didn't go get the F. Scott Fitzgerald quote. The F. Scott Fitzgerald quote, let me see if I can go get the F. Scott Fitzgerald quote really quick about two different thoughts. Okay, let's see if it comes up quick. I can't find it right away. I forgot it. Shows you what happens when you start a live stream show almost out after midnight. But I was watching the Dodgers game. I was watching the World Series. And I also was starting to... Now I'm feeling pretty good. Okay, anyways, there's the... I'm just going to paraphrase it. The F. Scott Fitzgerald quote about holding two conflicting views in your mind. And that's what we have now in the real estate market with this credit bubble, real estate bubble distortions. We have a home construction boom from the home builders on one hand, and then a coming eviction wave. And these things, I do not think that they are sustainable to have both of these things together for a long period of time. Now, maybe for a short period of time, maybe over the next couple months, maybe another quarter or two, but I do not think that you're going to have both of these things together for a long period of time. It just does not make much sense unless you know the Austrian School of Economics and the Cantillon Effect and all the distortions that governments and central banks can cause with too much fiat currency and credit that the banks are allowed to give out, and that government is allowed to give out to their cronies with the Cantillon Effect. Whoever is close to that currency trough, whoever is getting those discounted loans, whoever is getting those bailouts. So home builder confidence reaches record high for third consecutive month as buyers flood the market. This article is from October 19th by Jacob Passy from MarketWatch. The continued recovery in home sales remains a bright point for the rest of the economy. It is a false signal compared to the real economy, but it is a distortion because of the Cantillon Effect. Also, you have a lot of very high net worth people leaving the cities en masse. Sometimes they're willing to buy mansions or build or pay to have new homes built sight unseen. They are paying in some cases all cash, but with mortgages at all-time lows, with the Fed manipulating interest rates lower and buying record amounts of mortgage-backed securities, who's surprised that the distortions are going to be created? Well, if you don't know the Austrian School of Economics and you're just a deflationist, then you're going to be surprised. But if you understand the distortions that government and central banks can cause with manipulating interest rates, with creating currency and credit, with allowing the banks to do fractional reserve banking, and how all the reserve ratios have been lowered, there's going to be distortions, especially in the derivatives market and the Fed's buying all these mortgage-backed securities, and the Wall Street toxic derivative sausage-making machine sees easy money. Same thing with the bond trade. Look, I've had discussions with financial professionals buying some of these bonds that have flipped them for profits. Trust me, they were not buying the bonds because they believed in deflation. They were buying the bonds in February, March, April because they knew the Fed would pump them back up and they'd be able to flip them to the Fed or flipped them after the Fed reflated things and stabilized the bond market. Well, it's not really a market anymore because the Fed's basically saying that they'll start buying a lot of these things if things get in trouble. So they didn't believe that a lot of the people who are buying the bonds and leveraging up their trades for investment grade corporate bonds that are overrated by the ratings agencies, not really bonds, and junk bonds and leverage loans and CLOs, they didn't believe in deflation. They weren't buying the bonds because of that. They were buying the bonds because they knew that they could leverage up the trade and flip them to the Fed for easy, fast profits. And that's a corruption scheme. And that's the Cantillon Effect. There's tons of examples throughout history. The Cantillon Effect started taking place during John Law's Mississippi bubble when he saw it there. And then he was also involved in the South Sea bubble. So he rode those two bubbles up, and then he shorted both of those profitably. So he profitably rode up bubbles, and then he shorted both of those. The only person I know of that's done both. And then he wrote about it, and then Adam Smith plagiarized his writings in the Wealth of Nations. The construction industry's outlook continued to improve in October, according to research from a trade group released Monday. The National Association of Home Builders Monthly Confidence Index rose 2 points to a reading of 85 in October, the trade group said Monday. This was the third month in a row in which the index reading hit a record high, and together with September's figure, only the second time that the confidence measure was at or above 80. So this is the signs. This is frothy. These are the signs of a construction boom, of a home building real estate bubble boom. Now, how long is it going to go on? That's tough to say. But it is a bubble, and it's not sustainable, especially with the other part with the real economy, with the coming eviction wave, and I'll talk about that in a couple minutes. Index readings over 50 are a sign of improving confidence. The index dropped below 50 in April and May as concerns related to the pandemic intensified. What happened? The index that measures sentiment regarding current sales conditions increased 2 points to 90, while the index of expectations for future sales over the next 6 months rose 3 points to 88. The gauge reading prospective buyers remained the same at 74. At a regional level, though, confidence varied. The indexes for the Northeast and the West both increased 7 points in October to readings of 88 and 95 respectively, but in the Midwest, the index dropped 1 point to 77, and it fell 2 points in the South to 83. Quote, new single-family home sales are outpacing starts by a historic margin. Robert Dietz, chief economist at the National Association of Home Builders, said in the report, quote, bridging this gap will require either a gain in construction volume or reductions in available inventory, which is already at a historic low in terms of months supply. And that's one of the reasons why the lumber prices were going up enormously, 1,000%. The lumber prices at one point were up, and then they crashed. But they went up in like a 3-month span, give or take, about 1,000% move in the lumber prices. And you saw that at Home Depot or at Lowe's or your local hardware store. I'm hearing from people that you're still seeing that in high lumber prices. So the prices have not gone down in lumber prices. But they're going to start building a lot of new single-family homes, it looks like, in a lot of different areas, betting that a lot of people will continue to leave the city. So we'll have to see. But normally with these home builders, they always overbuild, and then Congress changes the rules, because this is what happened in 2008 and 9. The rules got changed. They got tens of billions or hundreds of billions in tax credits to protect themselves, and that's why they all didn't go bankrupt. So you can go look at this. My friend Dave Kranzler, you can go look up the home builder tax credits that Congress gave them to help them out during 2008 and 9. And my friend Dave Kranzler has been covering the home builders, the former hedge fund manager and bond trader and gold fund manager Dave Kranzler at Investment Research Dynamics. He covers the home builders a lot. Normally he's tried to short them too soon, but it's government policy, unfortunately, to try to keep real estate prices high. And then when real estate prices go up, then the home builders see high real estate prices because of devalued currency, because of the Cantillon effect, because of the tax scheme I've talked about for over a year now with capital gains taxes and property taxes on real estate, forcing real estate prices high, not allowing real estate prices to stay low. They must go up, not allowing them to slump. Because that's how many of the state and local governments, the majority of their budgets are based on property taxes. And the federal government takes a pretty large chunk, too, of capital gains taxes on real estate sales. Although you've had a lot of astute real estate investors for many decades now do the 1031 tax exchange, but if Joe Biden is elected, according to what's on his website, the 1031 tax exchange may be eliminated. Quote, new single-family homes outpacing a historic margin. Big picture, while summer... Okay, I already read that part. The big picture, while summer may now be gone, buyers are still searching for homes as if the weather was warm. Interest rates continue to drop to all-time lows because central banks are manipulating them lower, because governments can't afford to pay higher interest rates on all the debt that they keep. They're not cutting back on debt. Let's just put it that way. On Thursday, Freddie Mac reported that the 30-year fixed-rate mortgage averaged a record low of 2.81. Looking to take advantage of the low rates, Americans have flooded the real estate market, but with the inventory of existing homes so tight, many are considering newly constructed homes instead. The continued recovery in home sales should remain positive for the rest of the economy, though rising home prices could push some buyers out of the market eventually. Actually, according to some of the government data, there's a lot of 35-year-old people around that age, 35 to 38, like around that age demographic, men and women, who actually just lost their job and are still buying homes. So the long term, that's not very smart, but that's happening now. It's showing up in the government data that people say that they just bought their homes, and a lot of people now are recently unemployed. So that's clearly not sustainable, but that's also help padding the demand for housing. There are people who are buying homes with ultra cheap interest rates who don't have a job, who are temporarily unemployed, I guess, and betting that they will get a job if the economy comes back. So I would be cutting my expenses personally. I would not be increasing my expenses, but I guess people see that housing prices are going up. They don't understand the Cantillon Effect. They don't understand currency devaluations and distortions. They see those cheap mortgages being offered, and they're betting that they can go and find another job soon, and that maybe it's cheaper to pay a mortgage, pay the interest on a mortgage, pay the mortgage instead of renting. So you're seeing that. The data, in the government data, you are seeing people around 35 years old admitting that they're recently unemployed and buying homes. Okay, finally, and here's the other conflicting part of this article. And I have articles that I found. These are just lists of home builders ETFs if you want to track these. I may write articles on this for my Patreon account contributors in the coming weeks, maybe about hedged trades. But I mean, this bubble might go on for a little bit longer. It's tough to say exactly when, because if they're going to keep flooding currency and credit, the home builders are going to keep building these things. And temporarily, this bubble could go on for a while, because the goal of central planners and all levels of government is higher real estate prices. I mean, I've been talking about this for a long time. George Gammon, my friend, has been talking about this for a couple years, and he actually did the math in a video showing with higher nominal real estate prices, even if there is no upgrades in the home whatsoever for decades, the home's almost falling apart, but people can still live in it. It's not a teardown yet. The nominal value of the real estate goes up enormously, and the governments just take enormous tax revenues. In terms of property taxes, especially if there was teardowns and new homes were built on land and the value of the land goes up, it's a racket. So I have a list, and I'll put these below the article in the information and description section of home builders ETFs if you want to track this. But we're going to probably see more volatility in the coming quarters, because this is looking like a bubble. Okay, here's the other side of things, the distortion. So you have the construction boom that I just talked about, and home builder confidence. It's only been above 80 a couple times, according to the measurement, including 2005, 6, 7. So it's only been above this level a couple times. So 3 months in a row, it's booming higher for home builder confidence measures. And then here's the other side of things, that where I don't think, with the F. Scott Fitzgerald to paraphrase, where two things that conflict each other drastically can both be true for a very long period of time. Okay, so this article came out on October 20th from Zero Hedge. Quote, January is going to be a mess. A tsunami of evictions expected across the United States. The Trump administration walked back federal protections for renters in early October, even though rent moratoriums were still in effect, which allowed property owners and operators to begin the eviction process for millions of people, as tens of billions of dollars in back rent is coming due. And I got a super chat question last night from someone asking about some of this, and I was thinking about this a little bit more today, and I do have a legal background. I did go to law school, and I did take contracts law and some commercial law classes. So I am familiar with some of the basics. Also, I've studied a lot of real estate investing, and I'm friends with real estate investors like George Gammon. I also used to listen to a lot to my friend Jason Hartman's Real Estate Investing podcast. That is one of the really good rental property podcasts out there. Shout out to Jason. I know he listens to a lot of the shows, and he is also a Patreon account contributor. But unfortunately, what the federal government has done with the intervention and the blocking evictions, it is going to create a legal nightmare for rental property investors, rental property owners. It's also going to create a legal nightmare for the states, because each state in the United States has very different eviction laws. And some of those laws in some states, like California, might benefit the tenant or a squatter. So someone who breaks into a house and doesn't pay rent. And some other states might benefit, the eviction laws might protect the rental property owner, the property owner. So it really just depends. But when the federal government starts, the CDC put in a eviction ban, that just creates an enormous mess for all the different state laws. So you have now the states wondering if their state laws, how effective they're going to be. And I'm sure, I haven't checked the legal databases to see this, but I would not be surprised to see that a number of states have already started lawsuits against the CDC and the U.S. federal government, because states sue the federal government all the time. And I would not be surprised to see rental property investors, especially ones who own a lot of rental properties, start to sue the states and the federal government because of all the legal nightmares and loopholes and the distortions and the endless amount of legal bills and headaches that this is going to cause. If you are a lawyer trying to sort this all out, you are going to have enormous profits. You're going to have, if you're a lawyer trying to figure all this out for your clients, you're going to have a lot of billable hours. You're going to be making a lot of money billing your clients trying to figure all this stuff out. Between the federal law, the state law, which states are protecting tenants, which ones are protecting the real estate investors, the property owners, it is a mess. It is a legal nightmare. And you know what? It is far from over, because guess what? The governments can change the laws again. So you could be suing in court, dealing with all this stuff, and then, oh look, here comes even more law changes, even more rules changes. So for a lot of rental property owners out there, this is going to be an absolute mess, an absolute nightmare. And your legal bills trying to deal with all this nonsense, well, not only probably if the eviction ban is still in place, you're going to be paying the mortgage, which you didn't count on. You were counting on your tenant to pay your property taxes and your mortgage on a rental property. But now you might have a really large legal bill too, trying to sort through this mess. It is a disaster. So the lawyers are going to end up, whichever lawyers are getting hired to deal with all this and all the different states and deal with federal laws and sort through all this and deal with state laws on evictions for rental property investors, the lawyers are going to make a killing. Is it an investable trend? No. It's not investable to go and invest in the lawyers for this stuff. But as a potential real estate investor, this is something for me right now I would want to avoid. There is not clarity right now, especially when the government can continue to change all the levels of government. The states can change the rules too. California changed the rules, I think, even before the pandemic for evictions, because they were in a financial crisis. So you could have a lot of rules changes by all levels of government, state, local, municipalities, and then, of course, the federal government. It is a disaster. Okay, so in early September, the CDC published new temporary guidelines to hold evictions because of the pandemic. The Public Health Agency said, quote, the CDC, located within the Human Health Services, announces the issuance of an order under Section 361 of the Public Health Service Act to temporarily, it's just like William Shakespeare said, the lawyers always win. Act to temporarily halt, I think I'm loosely paraphrasing him there. I think he said death to lawyers. Act to temporarily halt residential evictions to prevent the further spread of the pandemic. This order is effective September 4th, 2020 through December 31st, 2020. So the question then is, will this law be renewed December 31st, 2020, or is it going to be then the real estate owners, the real estate investors, the property owners, are they going to get to evict the tenants and bring in new tenants so they can actually start collecting some rental property income that will then pay their property taxes and then pay their mortgage? It is a mess. So before the eviction moratorium went into effect on September 4th, there was a 72-hour lapse allowing landlords to evict non-paying tenants. Reuters interviewed Latrice Ben, 35 years old, who is one of the unfortunate people evicted during that time frame from her Milwaukee apartment. Let me take a little water break. Oh, Latrice Bean. Yeah, Latrice Bean, 35. Bean, who works at a software company like millions of other Americans, had their working hours reduced by because of the virus-induced economic downturn. Now, with an eviction on her record, making it more difficult to find a rental, she is now living in a temporary housing unit in a neighborhood even worse than the one before with her 5-year-old daughter. Quote, "I feel so unlucky," said Bean. "I have really been through it. 2020 has been a nightmarish year for millions of American renters. At least 8 million of them are facing eviction in the coming months. Collectively, these folks owe an estimated $32 billion in back rent. And remember, there's also mortgage-backed securities tied to these things. And guess who's buying those up? Guess who? The Wall Street, the toxic sausage derivative-making machine, that is the Wall Street banks, are making tons and tons of these things. They're exploding in amount. And the Federal Reserve is buying, what, 40 billion a month? And we'll probably end up buying even more than that. And a larger portion of the Fed's official balance sheet not only is U.S. Treasuries, but also mortgage-backed securities. The amount of mortgage-backed securities the Fed has bought since the pandemic started officially is over $600 billion worth of more mortgage-backed securities. Months of non-payment have exerted, and I did a show on that in the last couple weeks too. Months of non-payment have exerted financial pressure on property owners and operators, some of whom have already failed to service their mortgage debts. Princeton University Eviction Lab, a national housing research center, said on average there are roughly 3.6 million eviction cases per year. In early 2021, the number could be doubled, suggesting an eviction wave nothing like this country has ever seen before is ahead. Bob, and this is the conflicting part. So we have the homebuilder construction boom versus the largest eviction wave in history that could hit January 1st, 2021. Or in early 2021, depending upon state laws. So maybe it's not January 1st, 2021, maybe it's January or February. But still, it's looking like it's going to fall off a cliff. And we don't know how all the levels of government, especially the federal government, is going to decide with the rules changes and the laws. And then there's going to be a bunch of lawsuits trying to deal with all this. And it's a mess. It is a legal nightmare. The lawyers are going to make a lot of money sorting through this stuff. But if you're a rental property investor and you're in the wrong state or the wrong county, this could be illegal. Your legal bills could be a nightmare too. Bob Pinniger, CEO of the National Apartment Association, points out mom and pop landlords, quote, are under an unprecedented financial strain, as many have seen 8 months of non-payment from tenants. So no rental property income for 8 months, which means that they are not getting paid rental property income to pay their property taxes and pay the interest payments or the principal on their mortgages. Princeton Lab's 17 cities worth of data shows the pandemic began Since the pandemic began, at least 60,000 evictions have been recorded. As we've noted, evictions, homelessness, hunger crises, and the continued collapse of America's working poor continues to plague the economy as a conventional recession could be unfolding. Meanwhile, CNBC and Bloomberg are pumping homebuilder stocks. So do you think that's sustainable? Maybe it's sustainable for another couple months, maybe another couple quarters, while the eviction wave is coming forward? Since the CDC's eviction moratorium went into effect, metro areas across the U.S. have recorded a decline in evictions, but that hasn't stopped some landlords in places like Columbus, Ohio, Jacksonville, Florida, and Gainesville, Florida, who have been filing eviction notices for non-paying tenants. Come January, with billions of dollars in back rent due, struggling Americans like Natasha Burns, who owes more than $7,000, will be financially devastated in the new year. She told Reuters there's no way she can financially recover from this at the moment. Quote, if it weren't for the CDC ban, my kids and I would be homeless, Burns said. Making matters worse. Yeah, okay, there's bad grammar here. Making matters worse for the working poor. Some cities have allowed landlords to garnish 20% of an evicted. They didn't have worse in there in the grammar. Anyway, some cities have allowed landlords to garnish 20% of an evicted tenant's wages. Judgments ordering tenants to pay back rent can crush people's income for years. Nick Toman, a Milwaukee legal aid lawyer, said his normal clientele shifted from individuals to entire households as the pandemic wrecked the economy. Quote, I hear these stories from entire families who are on the side of the street, said Toman, choking up during an interview with Reuters in his Milwaukee office. Quote, these families have no place to go and no options, and I think it's abundantly clear that the safety net is just not big enough to handle something like this. Print, baby, print. So the Fed's balance sheet, for those of you out there who think that deflation is going to last a long time or there is no asset price inflation, the Fed's balance sheet, and I'm going to probably write an article on this in the next couple days, the Fed's balance sheet, it's going to be a layup. The Fed's balance sheet going over $10 trillion soon. It might even be $15 trillion or more in 3 years or less. It might double. It's a little bit below 7.2 trillion right now, the Fed's official balance sheet. I would not be shocked to see it at 15 trillion in only a couple years from now, to see it double. But you'll still have the deflationistas and certain deflationists. I heard one of the dumbest arguments from a deflationist a couple hours ago. He was saying that because Costco sells a hot dog for $1.50, therefore there is no inflation. He apparently doesn't know anything about the Costco business model, how the Costco company works. I studied it. I wrote articles on it when I was an investment analyst at Investing Daily many years ago. And the stock, it is very obvious that Costco subsidizes, meaning they sell a quality hot dog for only $1.50 with the soda at a loss as a perk for loyal customers that are members, along with their pizzas, along with their rotisserie chickens. It is a perk. That is not deflation. That is a perk. That is a customer rewards program. So Costco has done a cost-benefit analysis saying if we keep our customers happy, our members happy for their membership subscription each year, which is pure free cash flow, their membership, but we subsidize the cost of a hot dog, which probably costs them at least $7 each, probably more than that, for a quality hot dog and a soda. But they subsidize it for $1.50. But I heard a deflationist actually say that because Costco sells a hot dog with the soda for $1.50, that is deflation and there is no inflation. That is how ridiculous the arguments for some of these deflationists are. There is plenty of examples of shrinkflation, and the biggest case for inflation is asset price inflation, because that is what is required for capital gains taxes on stocks, bonds, and real estate, and also property taxes. Without asset price inflation, do you think any of these governments would be able to fund themselves at all? We probably would have collapsed a long time ago without nominal asset price inflation. But we have deflationists lecturing me that because Costco sells their hot dogs and a soda at $1.50, therefore there is no inflation. Meanwhile, Congress and the... You can't make this stuff up. I saw it in an email. There was actually like a couple paragraphs about this nonsense. Meanwhile, Congress and the Trump administration are deadlocked over a new stimulus bill that would include financial relief for tenants and landlords. Oops, I think I skipped a part here. Quote, Toman warned, quote, January is going to be a mess, while referring to the background due. Quote, nobody can get a new place because they have an eviction case pending against them, which hurts their credit report, and they don't have any money, any cash flow, because this is the main problem right now is cash flow. Okay, because cash flow can service debt. Wall Street can sell, the ratings agencies, Wall Street, governments. With cash flow, it makes everything look better. Without cash flow, you see who's swimming naked when the tide goes out. Who has too much debt? Who has too much debt on their balance sheet? Who has to sell assets to survive? Cash flow is king. Meanwhile, Congress and the Trump administration are deadlocked over a new stimulus bill that would include financial relief for tenants and landlords. John Pollock, a public justice center attorney and coordinator at the National Coalition for a Civil Right to Counsel, said January could bring a surge eviction and homelessness unlike anything we have ever seen before. With an eviction crisis likely ahead, unless more government intervention is seen, the economic crisis is far from over, as it could be a continuation of a conventional recession. And that's it for this short little article. So there you have it. You have two very conflicting stories, both of which are currently true, but can both of them be sustainably true for a long period of time? And I do not think that they can be sustainable, both of them. A home building construction boom where the home builders are as confident as they were probably in history the last couple months versus a coming eviction wave. Now, the wild card in all this, of course, is rule number one. Governments, central banks, all levels of government really changing the rules. So what is the CDC? What are other federal government agencies? I don't know, Housing and Urban Authority, HUD, Housing Urban Development, all these FHA, all these different housing-related federal government agencies, how are they going to handle this? That is the question. And we don't have answers for this right now. And you know what? We might have one rules change, and in a couple months or a couple weeks later, depending upon the election, we might have another. And most human beings are not mentally equipped to deal with this much uncertainty and to deal with this many rules changes. People, talks with a lot of people are not mentally comfortable dealing with rules changes like this. People want easy solutions to very, very difficult problems in life and investing. Apple Fritter says, stagflate tax lie. Yep, all day long, all day, all night. So you have taxes, you have politicians debating tax hikes because their government budgets have no cash flow, and they see you as a tax cow that they can milk or slaughter. And that's why people are leaving certain states and fleeing to others. And then the lie part is the rules changes. So rule number one, if you're new here, new to my YouTube channel, and the view count, the YouTube views count has been frozen for almost 2 weeks now. It has been stuck at 7.494 million. It has not moved. And I've done a lot of videos in the last 2 weeks. So YouTube, people are, oh, why would YouTube censor you? They've been censoring me for a long time. It started a lot in 2015 and 16, 2015 and 2016, especially about 6 months before that election. They took away all my ad revenues. And then a couple months after the 2016 election, my ad revenues, some of them, magically returned. And then guess what? Instead of losing dozens of subscribers per day who were removed from my YouTube channel, and many of them were unsubscribed from my channel without being notified, so they were just like plucked. YouTube just removed them and didn't tell them. And then they had to manually go back and check. Then my YouTube channel started growing again. So these are the games that big tech, so your Facebooks, your Twitters, your Googles, your YouTubes, all of them play. But we have enormous distortions, and that's why on the regular dating apps, there are a lot of people out there trying to, well, especially women, trying to make trades for their rent. It's really sad. So you match with a girl here on a dating app, on a regular dating app, and she was like, I can't pay my rent. Do you want to make a trade? That's how bad things are. That's why a lot of women are in sex work. We're heading towards Berlin, 10 years before Nazi Germany. You want to preview this historical fiction on Netflix? Go watch. It's still late Friday night. You can put on some Netflix now. Babylon Berlin. It's not a happy story, though. It's bad everywhere, man. There's different degrees of bad right now, unfortunately. That's the sad truth. All these governments are bad. I don't trust any government at this point. So I have a lot of friends who are real estate investors, rental property investors. People want certainty, people want answers, and unfortunately, you're not going to get them. You can go speak to 10 different lawyers who specialize in this, and they're going to research this, and you'll probably get 10 different answers. And guess what? It's still a fluid situation. The governments can change the rules again. So you think you know the rules now, and the election goes a certain way, and a couple months, 3 or 4 months from now, the rules are different. Or the rules could be changed again. And this goes back to, unfortunately, rule number one. We're in a bad spot here. So governments, central banks, the central planners, all levels of politicians, when they get in trouble, they blame capitalism, they blame other people. They don't take any job, they don't take a salary cut. They don't take a cut in their healthcare benefits or their retirement plans. They tax you. They stagflate, tax lie, they blame capitalism, and they look to screw over the private sector. Do you think that small business owners should be forced to pay higher minimum wage laws now? If you're a small business owner, you know this. If the government forces higher costs on you, you know you have to figure out how to offset your higher costs. It's a mess. Okay, let me take a look at the super chat, and then I will end the live stream show because we're over 35 minutes. I am feeling really good, though, for now. Okay, super chat from Durf Narf. Thank you for the Durf Nerf. Thank you for the $10 super chat. Much appreciated. Thanks for the extra hard work, extra live streaming lately. You are very welcome. I've been feeling a little bit better the last couple weeks. May have figured out a good combination of supplements and nootropics, but they tend to kick in after I've taken them and had a meal. They tend to kick in like in the evening. So I feel pretty good in the evenings now, and that's when I get a lot of my work done. You know, it'd be nice if I was a normal functioning adult, but that's not the health problem. With the health problems I have, it's not really possible right now. Unless someone wants to pay like $5 million for like my YouTube channel and my educational technology company business plan, and then I could go sit on the beach and fix my health problems. But until then, I have to hustle. So I can't really take off like a couple. There was someone who was saying like, you need to take a couple months off. Yeah, if I take a couple months off, I lose like all my patrons. And then YouTube's already taken all my ad revenue. It's basically down to zero. So even though I get like 5,000 views, and you see the ads run, YouTube just takes all of it for themselves. So my views counter is frozen. My views counter has been frozen at the same number now for like two weeks. And then I hit up the YouTube's customer service on their Twitter, and they lied to me. They're like, this is normal. This is routine. This happens sometimes when we clean up people's channels and we look for problems or something like that. And I was like, look, I've been doing this I've been making YouTube videos for over 10 years now, and this has never happened before. Where my YouTube views counter, when I've been doing a lot of videos for 2 weeks, has frozen like this. Never happened before. So thank you for he says, thanks for the extra hard work. You are very welcome. And thank you for the super chat. Because that's $10 that I was not going to make in ad revenues on this video. Hopefully I'll get a couple patrons though. Chipping in for $5 a month to cover. There's a lot of content behind the paywall, and there will be more content coming. I've been watching some World Series games, trying to take a little break. But I've done a lot of live stream shows for the last couple weeks, so it's not like I haven't done any work. Blake says, how can the Costco hot dog only be $1.50? It doesn't cost them $1.50 to make that hot dog. It costs them a lot more than that. They sell it at a loss. So it's like a rewards program or a loyalty program. So it's a perk. In exchange for being a Costco member, for paying your annual membership dues at whatever price point, because they have different ones. In exchange for that, they subsidize, they sell at a loss, $1.50 quality hot dog and soda, or you can get pizza, which is also subsidized, or their rotisserie chicken. So they've done the research for customer retention, cost-benefit analysis, and they've decided that if they keep the hot dog at that price, and they keep pizza at a certain price, they don't raise the price on the pizza, the portion size on the pizza stays hot, the portion size on the pizza isn't killed with shrinkflation, they don't kill the size of the hot dog with shrinkflation, they don't kill the size of the rotisserie chicken with shrinkflation, they don't jack the rotisserie chicken up to $10 each or $15 each or whatever, that they keep their paying subscribers, their members. And then they make money off other ways. But the deflationists just ignore the company's business model for like a rewards program or loyalty program. And because the price of the hot dog is not higher, therefore there is deflation. That's the quality arguments you hear from deflationists now. And I'm being sarcastic, okay? It's not a quality argument. And I won't... okay, so one more super chat here from J6. Thank you for the $4.99 super chat. It is much appreciated. Let me see if there's any more here. There's a couple more, I think. Okay, Durf Narv. Anthony Alpha, $5 super chat. Thank you for the $5 super chat. He says, thank you, Jason. Join his Patreon. It rules. I did not pay Anthony to say that. He paid me. But thank you for the $5 super chat. And he is one of over 1,000 Patreon account contributors per month who's still chipping in. And yes, I don't like... yes, there's censorship with all these big technology companies, but I'm not really sure where else to go without actually upgrading my website and making a bunch of other changes. There's problems with everything right now, unfortunately, for content creators. And YouTube is not making anything easier, as I've just highlighted in the last couple minutes. But I'll keep the content coming, because there's a lot to talk about. What a mess everything is. Who would have thought we would have a home builder construction boom and then a coming eviction wave? It's just two totally polar opposite things here. This is like a perfect example. I'm going to, hopefully some of my friends at the Mises Institute who listen to this podcast, like Tho Bishop and others, hopefully they will take some of this and then dissect it into a shorter article saying Cantillon Effect, a perfect example of Cantillon Effect. The distortions caused with a new real estate bubble and then a coming eviction wave. Two things that should not be said in the same sentence. Okay, $5 super chat from Bread and Gatorade. Why is it not Bread and Circus? But thank you for the $5 super chat. I need to buy a house in the next 6 months. Am I screwed? It depends where. You're going to get cheap interest rates. Depends where. I would look up some of the laws where you're buying it. So that is a very vague question, and real estate is all about, as any good salesperson that is a real estate agent will tell you, real estate is all about location, location, location. So your question then is the location. Are you buying in an area where there's a home construction boom? Are you buying in an area where the property prices are going up like crazy, but unemployment is spiking rapidly? Maybe the people who are buying those homes in that area are those 35 to 40-year-olds who just lost their job but see cheap interest rates and think, oh, I'll get a new job soon. Because the government data is showing that a lot of the new purchasers of homes lately, for the last 6 to 8 months, the first-time home buyers are unemployed. So we're back to the no income, no job, no... Well, I don't know if they're full ninjas. They're temporary ninjas. They're part-time ninjas. And by ninjas, it's no income, no job, no assets, if you weren't around in the last real estate bubble. So ninja was an acronym for no income, no job, no assets. So these are maybe temporary ninjas because they had a job, they had a career, and through the pandemic, it's gone. Almost 300 people watching, and I don't even have 100 likes yet. Please smash the like button before I end this live stream show. Someone says BitChute here. BitChute, the audience, if I move to BitChute, I might get some cryptocurrency, but the audience who was viewing this would probably drop enormously because YouTube is the second largest search engine on the planet. So I might make some cryptocurrency, but my audience would also collapse. And how do I know this? Because I have friends who tried to do this successfully and transition to the other platforms, and the other platforms won't take down your videos, but you also can't make a living from them. So I have to either be able to make a living making live stream shows or interviews or videos one way, or writing articles or other research, or a combination of the two. I can't give away everything for free, regardless of what that person, and my buddy Anthony, I was just discussing this with him a couple hours ago, the person there who was harassing me last week, who tried to join the Wall Street for Main Street Facebook group because he was harassing me for free stock picks last week. And then I clicked on his Facebook page, on his Facebook profile, and he had just bought a yacht last year. And this is a guy who didn't want to chip in $5 a month for my Patreon account content to see my stock research and my analysis there about royalty and streaming companies, gold and silver miners, oil companies, uranium companies, natural gas companies. He didn't want to pay even $5 a month. And on his Facebook profile, he had just bought a large boat and was going on expensive fishing trips, and it looked like he was an older gentleman down in Florida. Looked like he had some Instagram models or sugar babies that he was paying for. I know those are not cheap, but maybe he should have budgeted a little bit better. Instead of harassing me for free stock picks and then trying to join my Facebook group, harassing me for more free stock picks, when he had pictures on his Facebook of a boat he had bought last year. Large boat. So I won't mention the guy's name, but it's an inside joke between me and my friend Anthony because we were discussing that a couple hours ago. Just ridiculous. People are like, oh, I don't know if you get harassed. This guy was ridiculous. And then I clicked on his Facebook profile. There's no way he can't afford $5 a month for content, for the research I do. So he was just blowing his money on expensive fishing trips, and his boat, probably the diesel for his boat was probably a couple $1,000. And then also probably his sugar baby girlfriend or Instagram model girlfriend. That was like 30 years younger than him. Because it's pay to play. Okay, last super chat here from Ike. He says he's my #1 fan with the sticker. Thank you for the $10 super chat, Ike. I much appreciate it. Are you related to the Ike from South Park? Okay, that is it for this live stream show. Thank you for listening. And the other stuff, the Market Watch article on homebuilder construction confidence in the boom will be below the video in the information and description section. The eviction article about the eviction wave coming in January will be below the video in the information and description section. And the links to the homebuilders ETFs, articles on those, if you want to research that and maybe potentially down the line look for ideas to bet on the bubble bursting, or at least temporarily bursting, because maybe they allow it for like 8 weeks or something, or temporarily burst, will be below the video in the information and description section. But the most important thing here is the rules changes. We do not know what the CDC, a lot of it's probably going to depend on the election. But stagflate, tax lie, and we'll see what happens to rental property invest. At this point, there's a lot of uncertainty for rental property investors because of federal laws. So even if you're in the right state that protects property owners, that protects rental property investors, the federal laws could potentially do immense damage and distortions. And then you might need to hire a lawyer to sue to deal with it. What a mess.